What's going on, boys? So today I'm going to be showing you the simple and easy EMA crossover strategy that'll overall help you boost your win percentage and also have you in the trade longer and gain more profits. So let's get right into it. So what we need is a 5-minute chart, as you can see up over here, and we need the 9 EMA, sorry, 9 EMA as well as the 20 EMA. Okay. So I have 3 setups on the SPY chart for us today that we're going to be reviewing. So this is our first setup. We're currently in replay mode, so each candle, this has already happened. I'm just going to be showing you 3 setups that this strategy is perfectly worked on, and if you can apply this strategy to these setups, then it could work for you as well. So right over here, we got SPY. We always mark down pre-market highs because they play a significant role during the intraday trading sessions, as you'll see in this video. So we got 2 tests over here on the 5-minute chart and pre-market highs. SPY opens up with a strong bullish move, okay, and as we can see, the EMA did cross over in pre-market right over here, okay. It's just going to be like a little sneak peek. But let me show you. So we come up, we reject pre-market highs a second time, we come back down, and then we put in a this is a lower low, and then this is a higher low. Put in a higher low, so we are currently in an uptrend. SPY comes up, breaks through pre-market highs, consolidates over here a little, and then breaks out, comes up, and then slowly comes back down. Now, playing the open is a bit of a risk. I don't recommend beginner traders playing the open. I would say at least wait until 7 o'clock right over here until you want to start trading, because then it gives you a clearer mindset and much more cleaner price action. But let's hop into this trade. Let's see what happens and how we are going to be playing our trades. So SPY does end up coming back down. All right. We have 3 bearish candles. 3 bearish candles. This is called 3 black crows. Okay. So now I'm kind of skeptical of kind of going long, especially over here. I wouldn't want to really go long anymore just because we had 3 big bearish candles that went from 451.10 all the way down to 448. We dropped around $3 and we closed below pre-market highs right over here. So continue watching. So we have a EMA crossover right over here, and where is this crossover? It's at a resistance right now because price is below this level. It's below a resistance level. So EMA has crossed over and we're below a resistance level. You could technically take this trade right over here, but we also don't want to enter based off the EMA crossover because we want to wait for confirmation. Sometimes these EMA crossovers can have you have a fake out, and we do not want that. All right, we want to have the cleanest possible trade. So let's get rid of this. Let's say we didn't enter right over here. We continue to wait. All right, and then price slowly starts making its way back up. Now, look how clean this setup is. This setup is extremely clean right over here. SPY goes all the way up, completely reverses, comes down, tests the EMA once, all right, but it wasn't at resistance, it was just above resistance, but still completely rejected that. The 8 EMA and the 21 EMA on that crossover came all the way back down just until the pre-market opens low. So right over here, came down to right here, decided to bounce up, okay, and it goes and it hits the resistance, pre-market resistance, and it tests this EMA. Testing the EMA could be a confirmation itself, but also testing the EMA and testing pre-market resistance, that's a good setup, and that's something I would like to trade. So right now we're going to be entering a position right over here. What we're going to be doing is setting our stop loss right above this zone, okay, and we're going to be setting our target to pre-market lows right over here. Let's speed up these candles and see what happens. Nice. So we've made a big profit, okay? All right. We'll stop it right here. So we ended up making a big profit, big target profit, okay? We got in at 449.30 basically, and we held all the way down to 446.70. So that is a $3 move, which is a really good move, and I'm happy with it. But we could have had an extra from 446 to 444. We could have a complete like a $4 move. Okay, or I mean, sorry, a $5 move instead of just a $3 move. So what we could have done is we could have just held until the EMAs crossed over. EMAs crossed over down over here. Sorry. EMAs crossed over on this candle over here. And this candle was 446.39. So we technically could have held all the way down to here, or we could have just held and see what was happening with price action. Now, yes, we did. We could have. We took profits up over here. All right. We took profits at this yellow line right over here because we aligned it with the pre-market lows. But another way we could have made extra money is that we could have taken a partial over here. Okay, so let's see. This could have been our first partial. Partial means taking off some money off the table, meaning if you're in a 10 contract or 10 shares, you sell 5 of those contracts or 5 of those shares, you just take in your first partial. Okay, and you could play this based off the partials. So we had one partial over here. All right, now that we've broken this, now let's say we wanted to wait until price got all the way down to here. And why did I say here? It's because this is where yesterday's low was, right over here. This was yesterday's low. So we could have waited until price got down to here, and we would have taken our second partial down over here. I don't know about you, but I would have loved to have another dollar and a half move from this initial position up over here. More money to have been made. So this is our first setup. Okay, I'm gonna make this screen less crowded. And to make things better, this setup happened 3 days in a row. So let's go to our second setup. Okay, this is SPY. All right, and we're gonna come back all the way over here. And this is our third setup, but we'll get to that. So I made this zone, okay, based on the 15-minute chart. But if we go down to the 5-minute, we could see it a bit more in depth. So we've had 1, 2, 3, 4, 5 in pre-market. If we count that, 6, 7. We've had more than 7 touches in this area of interest, this zone right over here. Okay, so that's definitely going to be something I'm going to be looking for. All right, for when price gets to that. So what happens here? So from pre-market, we're in a downtrend. Okay, whenever these EMAs cross over, we're either in an uptrend or a downtrend. When the 9 EMA is below the 20 EMA, we're in a downtrend, and when the 9 EMA is above the 20 EMA, we're in an uptrend. Okay. So price is already in a downtrend over here. Okay, we're at that zone, area of interest. Okay, we notice that price is just chopping and it's moving sideways. So what do we do? Let me get rid of these. So what do? We notice that price is chopping and moving sideways. We are already in a downtrend. We could count this as a test over here. We can count this as a test over here. We're at a resistance zone. So all I want to do is either wait for a candle to close below over here, or I could just get in on any retest. All right, so let's play this out a bit more. All right, so we've had right over here, if we zoom in, we got a lower high and another lower high. So 2 lower highs. That's good enough for me to enter the trade. We're at a resistance. We're making lower highs. We're making lower highs, and we are respecting these EMAs. We're not breaking above them. We're not closing above them. So this is a good enough reason for me to enter a trade. We're also at resistance. So let's set this as our trade. We're going to put our stop loss above that zone, and we're going to set our targets to... So nothing crazy, but we're going to set it with yesterday's pre-market low, just for fun. All right, so right over here would be yesterday's pre-market low. Let's extend this, and let's see how this trade would have played out. Nice. Price just kept on going. All right. So first target, yesterday's pre-market low. Now, if we just got in over here and sold our full position, we would have made 448. From 448 all the way down to 446, we would have made $2 move. But if we held all the way down here, that would have been $4 move. Now, what can we do? To stay in these positions longer, we can go off base this EMA crossover, all right, basically not leaving until the EMA cross back up, or we could just take partials. So over here we have two potential partial opportunities. We had this partial over here, this partial right over here, and then we had this partial profit right over here. Alright, so this partial was aligned with yesterday's pre-market lows, and then this partial was aligned with yesterday's daily lows, okay? And we would have stayed in based off the EMAs not crossing over, okay? So this is how we can maximize and gain maximum profit. And then as you can see right over here, we put a trend reversal. We are at a support technically. Price comes up, tests the EMAs down over here and goes. This right over here could have been another position for going long. Right down over here could have been a small position after we had this ginormous gain, and we could have set our targets at wherever we broke below. Okay, even this trade would have played out properly. Right over there. You see how simple this strategy is? You literally just go long at support or short at resistance, and whenever the EMAs cross over, you enter based off that crossover. If you missed this key opportunity over here, you still have this one right over here. You would have just made less money. Okay, you would have just made less money. You just hit your take target right there, take stop loss below these candles right over here, and you would have just gone long until we got to resistance, because the EMAs are crossed over. So I want to go long. I don't want to fight the trend. EMAs over here crossed down. I don't want to fight the trend, so I don't want to go short. Okay, this strategy is key, and this happened 3 days in a row. So let me show you the third setup. All right, so here was our third setup. Okay, so what do we got here? We got that SPY's, this is SPY's support, pre-market support, and then we got this resistance up over here, which we used on our previous setup, okay? Let's see how this plays out, okay? So we have an aggressive move off the open towards the downside, all right? Really aggressive, but this was never at resistance, and I don't want to diddle in the middle, okay? I actually kind of want to wait till 7 o'clock on this trade, just because it's super aggressive and price could easily trend and reverse all the way back up. And we are also at a support. So see how I'm not even going based off this EMA setup. I'm going up based off of price action. This EMA is just a guidance, okay? And look how much price has already dropped. Price has dropped from 449 and it dropped all the way down to 446. I don't think there's going to be more downside to that. I think actually today might be a recovery day, since we're also at a support. Okay, so let's just see how this plays out. All right, so this whole area over here, this whole chop is definitely a no trade zone. I don't want to be in this chop at all. So like I said, this is a no trade zone. I don't want to trade over here. If you caught this open trade up over here, good for you. It's a super aggressive trade move down just at the open, and you could have caught this small trade from here to here. This would have been 446 all the way down to 445. You'd have made $1, but I mean, that's not even a 1-to-1 risk to reward ratio, and I don't want to take anything below a 3 or 2-to-1. All right, definitely on an intraday basis. Okay, so we have this no trade zone, this chop over here that I would never want to get stuck in. Okay, we see that price is starting to reverse. We got an EMA cross over here, and we're just at this resistance now. Okay, it's a resistance now because price is below and it's coming up to that. So let's see if price can if it can reject and continue down and break below this, I'd want to go short. If not, I'd want to go long. Okay. All right. So price comes all the way back up, and look at this. It's retesting right over here. But say we don't want to get over here because it closed just below this EMA, this zone. We can wait. All right. Now we have two confirmations. We have this confirmation right here where it just bounced off the 20 EMA super clean, and then we come back up and we got this confirmation right over here of this candlestick bouncing off the 80 EMA, okay, at a support. That's good enough confirmation for me. That's two confirmations. I want to go long over here, and I want to take my profits at the resistance. Okay, let's play this out. Would have been a very long trade, but eventually it would have worked out right over here. 448.67. You'd have got in at 446.60. That's $2. Contracts would have went like $2-3, and if you were trading SPX, that's like a $5 move right there. Boys, thanks for staying tuned throughout this whole video. I will see you in the next one. Thank you.